There are moments in India's history
The future belongs to nations with grains and not with guns.
that marks a shifting of the tide.
एक नई ऐप लॉन्च की गई है जिसका नाम रखा है भीम.
Moments that leave us thinking maybe things could be different. India has begun to innovate, to build for Bharat. Based on low-cost, inclusive, scalable and rigorous technology innovation, Account Aggregator is the next chapter of this movement. It is enabling the first operational open banking network in the world for real-time financial data sharing. AA will create an explosion of new product types and access to formal financial services. India is leading the way on fintech innovation. We welcome you to join us in the future.
3, 2, 1, 0.
Good evening, everyone. I hope you can hear me clearly. Thank you all for joining us. I understand after over 1,300 registrations, there are 800 of you here with us today live, so we're really excited. My name is Kamya Chandra. I'm a fellow at iSpirit Foundation, and on behalf of iSpirit and really the entire financial ecosystem, I'd like to welcome you to this official go live of the Account Aggregator ecosystem. For those of you that don't know, iSpirit is a not-for-profit technology think and do tank that focuses on building public digital infrastructure for India. It started with identity in the late 2000s, went on to payments with UPI, bill payments, and others. And today we're here for the third chapter of this movement, which is user control over data and consented financial data sharing. We're here to mark really the milestone of AA going live with 8 major national banks. I won't tell you who they are just yet. 8 major national banks adopting the account aggregator standards to make it a reality. iSpirit is sort of the facilitator here. The real heroes of this moment are the 50 or so people you're going to hear from in the next sort of 120 minutes. So we're really glad to have you join us here today. And one or two housekeeping announcements before I introduce Deputy Governor Rao. Please do use the full screen where you can. I see you've already started using the emoticons. This is a virtual event, but we know the energy is high, and we want to feel that from you. So that's how you will sort of give your feedback to speakers. Not me, I have high energy already, but the rest of the speakers. And feel free to also join some of the thematic networking tables that have been created as part of the social lounge. So without further ado, I'd just like to quickly introduce Deputy Governor M. Rajeshwar Rao. RBI created the regulatory framework for account aggregator in the banking sector. It's really the reason we're here today. And Deputy Governor Rao took over, as DG last October. He's a veteran economist, a career central banker, looks after many, many departments at RBI, including the one that oversees account aggregator. And, those who know him say he's one of the most sort of thoughtful, deliberate, and forward-looking regulators there is. And, one colleague who won't be named from the banking sector had said he's so rigorous that you can't go to a meeting unprepared with Governor Rao, Deputy Governor Rao. So without further ado, I'll just hand it over, please, over to you, Deputy Governor.
Thank you, Kamya. I hope I'm audible to all of you. Anyway, thank you for this kind invitation and opportunity to be here with you all. Hope all of you are keeping safe in these challenging times. Now, technology has transformed our lives in this increasingly interconnected world, with mobiles and handheld devices enabling ubiquitous access and broader reach. It has concomitantly enabled businesses to penetrate new markets and new geographies, which were hitherto unable to reach. This growth of technology has also had the capacity to transform financial intermediation as access to financial data, when harnessed to sophisticated technology, creates the potential to bring changes in the delivery of products and services, consumer service, financial products from what we have experienced and grown accustomed to over the years. In the financial space, regulators across the globe over the last few years have played an enabling role to unlock access to financial data buried within the books of the financial institutions through the initiatives such as the Payment System Directive in Europe and the Account Aggregator in India. The key impact of these initiatives has been the democratization of data and shift of power over data accessibility and usage to the owners of data rather than to the holders of the data. In recent years, technology-driven newer modes of financing, financial business models, specialized financial services and products have enabled fintech-driven innovation in areas such as P2P lending, wealth management, microfinance, smart contracts, artificial intelligence and machine learning-based decision analysis systems, robo-advisories, etc. However, fragmentation of financial data across different financial service providers creates hurdles for effectively utilizing it to address credit needs of individuals and to provide comprehensive financial solutions to them. With a favorable startup ecosystem set up by the Government of India, India has seen massive investments into the financial services sector. It has further accelerated with a surge in e-commerce and smartphone penetration. The integration of financial fintech-based delivery of products and services with the formal channels has extended the last mile availability of financial services. I believe the Reserve Bank has been ahead of the curve in adoption of financial technologies and has come out with appropriate enabling regulations for new products and services when the industry itself was at a nascent stage. Peer-to-peer lending, account aggregator, and credit intermediation over the digital platform only NBFCs are cases in point where regulation has helped the industry to grow in a systematic and robust manner. RBI's initiatives on UPI, Regulatory Sandbox, and Innovation Hub are also testament to our proactive fintech initiatives. However, keeping in view the theme of this event, allow me to focus on the issues around the institution of and the framework around the account aggregators for today. Now, the account aggregators has been an initiative of the RBI. The concept of the account aggregator, or AA in short, was born on 17 February 2014 when the Union Minister of Finance in the interim budget of 2014 sought to create one record for all financial assets of individuals. To realize this goal, the concept of account aggregator was envisaged, and the Reserve Bank was assigned the task of formulation of an enabling regulatory framework. The framework for account aggregators was issued in September 2016 with the objective of facilitating aggregation of all financial assets of an individual. The approach was to make sharing and aggregation of financial data possible in a secure, transparent, and efficient manner by setting up an intermediary which will be responsible for customers' consent management. These intermediaries are the account aggregators who are also registered as NBFCs with the Reserve Bank of India. Account aggregator retrieves or collects information related to financial assets of a customer from holders of such information, who are commonly termed as financial information providers, and aggregates, consolidates, and presents it to the customers or the specified users, who are termed as financial information users. The transfer of such information is based on an explicit consent of the customer, and the response is envisaged to occur in real time. Data cannot be stored by the aggregator or used by it for any other purpose and shall be shared only with the regulated financial entities. The directions require robust data security and customer grievance redressal mechanisms to be in place. The account aggregator should have proper consent architecture and audit trails should be available. The directions require that the financial information providers to implement interfaces that will allow the account aggregators to submit consent artifacts and authenticate each other to enable flow of financial information to the account aggregator. Now, what are the advantages of the account aggregator ecosystem? It basically assists in decision making required for provision of various financial services, that is, lending, loan monitoring, wealth management, personal finance management, etc., by eliminating paper trails. Needless to mention, what I have indicated above is not an exhaustive list. Further, account aggregators can facilitate access to financial services and credit to earlier underserved and unserved segments by reducing information asymmetry. Let us take the example of MSMEs. MSMEs play a pivotal role in economic development and creation of employment. However, they face on occasions obstacles in accessing credit from formal channels due to the lack of acceptable collateral and verifiable data about their financial health. Disruptions to business due to COVID pandemic conditions have worsened this credit gap. In the current environment, their financial data resides with multiple regulated entities, and it becomes difficult for the MSME borrowers to consolidate this data and share it with the lending institutions. If not an obstacle, it can still cause delays in the credit sanction process and affects, that is, the MSME's ability to access credit in a timely manner. In order to solve this problem, the account aggregator can act as an intermediary in presenting the financial data based on an explicit consent from the customer. Account aggregators can consolidate all the consented transactional data, including cash flow statements across lenders. Data would be fetched real time directly from the source, tamper proof, and at a low cost. This would bring down the cost and burden of verifying the data and compliance cost for the borrower. Now, some of the initiatives for the account aggregator framework involves technical specifications. As the business of account aggregators grow, it is feasible for different categories of financial institutions under the jurisdiction of different financial regulators to talk to one another over their respective technology-based platforms. Seamless movement of data over different institutions with complete confidentiality will be the basic requirement for orderly growth and smooth functioning of the account aggregator framework. To ensure seamless and secure flow of data across the account aggregators and the financial information providers, there should be a need to have some generic technical standards prescribed for the account aggregator ecosystem participants so that the movement of data is truly authorized and secure. Generic technical standards should aim to ensure that 1. There is smooth and consent driven flow of information across participants in the account aggregator setup. Interoperability in the account aggregator framework is ensured. Integrity of data flowing across the participants is enforced. And finally, the scope for future development is not restricted. Towards this end, the Reserve Bank of India Information Technology Private Limited, called REBIT, which is a wholly owned subsidiary of the Reserve Bank of India, has, in consultation with us, come out with a set of open API-based technical standards. The key feature of these technical standards are recommended so as to ensure that the design of the AA ecosystem is data blind, based on electronic consent, generates non-repudiable audit trails, and allows for interoperability and layered innovation. The regulatory features of the account aggregator framework, that is, the explicit and electronic consent for data sharing, audit trails, data blind account aggregator platforms, are progressive and preemptive in nature. The customer has full control over the information that is being shared through the account aggregator and is also in charge of the consent mechanism. These measures will ensure that the apprehensions around privacy and concerns regarding data protection are largely addressed. The account aggregator frameworks also benefit the financial information users as they get access to financial information of potential customers on a real-time basis, which reduces the turnaround time for provision of financial services, thereby achieving convenience and speed demanded by the customers. Now, what are the challenges and the way forward for the account aggregator ecosystem in India? The larger goal of the account aggregator is to empower customers and reduce information asymmetry, and is aimed at ensuring that the customer has full control over the information that is being shared through the account aggregator and for what purpose. Account aggregator frameworks also benefits the users as they get access to the financial information of potential customers on a real-time basis, reducing the turnaround time for the provision of financial services. The account aggregators can thus bolster the lending ecosystem, which can make India a data-rich country and also boost the digital economy. While the regulatory intent has been well received from all quarters, a good piece of regulation can come to naught if the desired objectives of the regulation are not met. The desired objective in the case of account aggregator ecosystem will be attained when a large number of customers and information providers are onboarded on the account aggregator platforms and they are able to get aggregated data in a form and manner desired by the users in a completely safe and secure environment. What is equally important is that the information providers and the information users tap into the vast potential of this innovative platform. The systems will function optimally only when a variety of customer accounts maintained across different financial entities, cutting across financial sector regulators, are linked to the account aggregator. For this to happen, the information providers need to see value in the framework. This, in my view, is a key to the development of a viable business model for the account aggregator ecosystem in India. As a regulator, we have created a launchpad by coming out with the regulatory framework and then by prescribing technical standards through our subsidiary, the Rebit. The account aggregator ecosystem is still in a nascent stage of development, but given the sensitivity of the platform on account of the nature of data handled by it, it becomes imperative to ensure that the growth is orderly. As the system grows and matures, newer business models and customer offerings will pour in. While RBI is open and encouraging to innovation, we need to bear in mind that there is a need to maintain balance between innovation and the spirit of account aggregator regulatory structure. Let me conclude at this point by reiterating that from the Reserve Bank perspective, we do support innovation in financial space, but this support and encouragement will be done while ensuring that we develop and grow a robust financial system to support a vibrant and growing economy. Thank you.
Thank you, Deputy Governor Rao, for your comments, for laying out so clearly the benefits and consumer centrality of account aggregator. It's really powerful to see RBI, as an innovator among central banks globally, and the first central bank in the world to actually create this techno-legal framework of account aggregator via Rebit and others. So thank you so much. To the audience members, I understand now we are up to 900 viewers and 1,700 registrations. We'll take a 1-minute break before we come back to view the next session by Mr. Nandan Nilekani and Siddharth Shetty. Thank you.
Okay, thank you.